Take me to the sea, wash away my worries, let my soul be free. Take me to the ocean, take me to the sea, wash away my worries, let my soul be free.
Hello world, I'm Mhax. Back in IRL, I go by Curtis. Welcome to another episode of the State Copy Podcast. As always, I'll remind you to review episode 0 and its appended segments for terms, conditions, and disclosures applicable to the entirety of this content. Thank you. Well, hey everybody, good morning. It's Monday, March 27th. I feel like almost saying the time because everything's happening so fast right now. It's just before 10 local. Today I think I'm just gonna riff. So this is part 2 of that I promised 2 days ago, but life and I needed time to process all of this. Today I'm just gonna riff. I really try and do my content without any cuts, and if I put a lot of thought into it, I can get a start, middle, and end that flows very well. But when there's so many like granular details to the what I want to try and talk about, it's just too difficult to do that. So this will be largely kind of unorganized. I might bounce around a little bit, but I think there's a lot of really good as always, I'm trying to find all the nuance and the rich context of what's happening around me. And so yeah, we're just gonna jam and see how this goes. It won't be organized today, but just stick with me. There's good stuff here. So I think where I want to start is toward the end of my last show. There was a segment where my brilliant cousin wrote a stack of very complex questions about this GFC versus the first big one back in 2008. And there's so much to this. It's so difficult to find a place to start. I think what I'm going to do is I'm going to read through his response after watching my last show, and then I'm going to just try and address the different things that I see him doing as I go, him pointing out. So he says, Curtis, thanks for taking the time to respond on your podcast, cuz. Smiley face. I'm going to respond to you first since I need to rely on my memory of your video. First, let me check this rough summary of my takeaways from your podcast. This is funny. He's fucking with me here. And I deserve it. Brandon, I apologize if parts of my tone in the last show, I feel like what I was trying to do, I was trying to encourage whatever audience I have to just kind of zoom out. And that's why I was trying to, I made a case for markets and places. I pointed out that I made a lot of, I don't want to say, almost dismissive comments about regulatory bodies and their effectiveness. And that's where I think, and I also didn't mean to imply that, a thing I have to do in the show is summarize a lot of, as you describe these things, I think there might be a sophistication in your knowledge of these topics, like derivatives and the specifics of how these regulatory agencies work and what their powers are. A lot of what my show is about, a TLDR. So I was kind of using your questions as an opportunity to try and shrink down the complexity of a lot of that information. So I didn't mean to imply any kind of lack of sophistication of your understanding of any of these things. I'm really just trying to use it as a tool to drive sort of a outside conversation that's more accessible, right? So sorry if any of that came off that way. All right. So now Brandon goes on to say, let's see. He says, first, let me check this rough summary of my takeaways from your podcast. There's nothing to fear about a global financial crisis. Let's break out the popcorn. Popcorn emoticon and a joy emoticon. There is no real world risk to society from the financial industry, and governments are incapable of competently regulating it. So the government and you and I should just not worry about it. Next bullet. Large financial entities have demonstrated that they generally are good guys and just want to make some money and wouldn't knowingly put others at risk with their gambles. Next bullet. If large entities make bets and lose, it's fine because they will suffer the consequences on their own. Next bullet. Derivatives are primarily a risk mitigation financial instrument, so that market shouldn't be viewed as a reckless carnival of financial debauchery. Did I misunderstand any of your key points? And then he goes on to say in another reply, I hope you're picking up on the tongue-in-cheek vibe here, because I genuinely want your opinion and insight. I think everyone could benefit from it. But I'm really hoping to inspire you to actually take a look under the hood of the market and share your considered analysis. In parentheses, he says, I can go to Investopia or my memory of undergrad finance and econ classes for platitudes and generalizations. The thing is, Brando, platitudes and generalizations is totally what I think we need right now. I don't think we need TLDRs. Like, as we go, we never had a way for somebody to set up like a TV studio and just squish it all down into TLDRs. That's specifically what I'm trying to do here. I don't want to. When I go into the nuts and bolts of this, as I can see that you have, it makes my fucking head hurt, man. Nobody's going to do that. It's on us who, for some weird reason, enjoy doing this to try and squish it down. We need generalizations. That's how we help everybody else make sense of it. That's what I'm trying to do. So that's what you're going to get from me. I'm sorry, dude. Let's see. He says, but I'm really hoping to inspire you to actually I do look under the hood, man, of that market and share your considered analysis. I can go to investment. Where did I leave off? I have my tools and lenses for looking at such issues, and you have a different set that I'm wanting to solicit. So a core strategy that I've found is to say, is to divorce myself of any ego about this and to try and come up with the exact interpretation. The secret sauce is you start cheating off of everybody's homework. You go look at what everybody's saying and then you harmonize them into a single like three-dimensional picture of what's actually happening. And it's really hard to do that. And I can't do it if I zoom way in and say, well, see this line here? That's exactly why all of the rails are falling off the crazy train. I'm trying to zoom out as far as I can because it's the only way you can harmonize those views. I don't think the answer is in the, what I would try and inspire you to, an approach I would inspire you to consider is the zoom out approach. I think where we get into trouble as a species is when we zoom in too far and somebody says, I see it, it's this. And then we, in a clumsy way, adopt that. And we don't take into account all the second and third order effects of just looking at that little piece. If you zoom out, then you can watch how this soup of complexity is. What's a good way? So, I said this is going to be a jam, so I'm going to bounce around. let's bounce back to the last global apocalypse, financial apocalypse. Let's bounce back to '08. So if you were zoomed out in '08, you would have known that something was going to break. Like the macro economists, when they're zooming way out, they're going, okay, I'm not going to be mad at a specific party for doing this. I'm going to look at all of it and see that it's just an inevitable thing that's going to happen. And then I'm going to try and make useful predictions on how to play that. That's what these macro people are doing. They're looking at the whole picture. They're looking at, okay, to a large degree, markets are cyclical, and even global monetary and world order is cyclical. That's why I really hope, before we go into '08, I got to back up a little further. Ray Dalio's 43 Minutes. I hope you watch that, man. It's so critical. Like, if you really, like, I can easily separate myself from all the minutia of how, like, the specific thing that's going to pop, that is too complex to see. But if I back up a bit, I can see that we were always on an inevitable trajectory of growth, good times, and then decline and stagnation. And Ray Dalio's work there, he tries to compress all of, like, the last several thousand years of monetary systems that we've tried, and down in such that, so go watch the Changing World Order by Ray Dalio if you haven't seen it yet, because it gives you that zoomed out picture. Because what it tells you is that this will inevitably break. It always does. And right at about the 90-year mark is when it happens. When I look at time, everybody in macro and everybody who does this, trying to study it all super carefully and then read the tea leaves and do accurate prediction on what's going to happen. They're trying. So what we do is we look for historic precedents of a similar moment in time. And a lot of people, the two moments in time that everybody are looking at are the 1940s and the 1970s. They're looking at them, and there's a whole bunch of reasons for that. The 1970s were a time where I think we're at peak good times, but then for a bunch of reasons that are demographic, women entering the workforce, right as the baby boomer demographic hit, there was just this lack of jobs that drove up wages and created an inflationary shock. So every history is never the same. Things are never the same. They just sort of rhyme with different times. There's different elements that rhyme. And then the 40s, there was a very similar thing where you had World War II as just this major shock that was kind of like COVID. There's a lot of, this time really rhymes with the 40s. But I feel like as I look at it, it feels a lot more like '08 was 1929. When I look at it through the lens of, when I look at it through the lens that Ray Dalio is using in that fantastic TLDR he created, I see it as a new global world order was formed right after that just global economic collapse. It was very similar to '08, and they follow roughly 90-ish year time intervals all throughout our history. So when I look at '08, it looks a lot like 1929 to me. And then the time after that, especially if you look at like I mentioned, the global GDP, where it was just on this uptrend, and then right in '08, it just goes bloop, and then it comes, we kind of do this half-ass, like we skate across the bottom for a bit in '09, and then as it recovers, it continues on a trend up, but it's not following the same line. It's below trend. that looks a lot like the 30s to me when I look at it. Like, not exactly. Like, nothing's ever going to rhyme exactly. And there's so many variables that are wildly different because of the very tightly coupled global economy we now have, because of free trade and emergent superpowers like China. And then you also have everything our technology put, so it will never be exactly the same. All you can do is try and zoom out far enough to where you can find the time that it most rhymes with. When I look at this, it looks like we've just gone through a depression, because that was the textbook definition of a depression that we all followed up until very recently, when it looked like we were going through one. It was a period of sustained below trend GDP. And that's what we just went through. It was just not nearly as yucky as the last one because of all of our technical innovation. We were able to sort of feed, house, and entertain a lot more people than in the last crisis. And we've just been kind of in this place where nobody's doing that great. You know, I mean, there's these little pockets where innovation and growth, and that's like Web3 and all that, where there's just ridiculous growth. But as a you know, a consolidated, you know, view, or as a aggregate, it's been kind of meh. You know, like that was the teens. You know, that was the last 14 years in the global economy. So if you look at that time, and you look at the times before it that look very similar, that are running on that 90-year cadence, after this trough we've just gone through, then because everybody, they don't realize, like, all of that tension in the system where there are new massive financial losers in a system and winners, it forces geopolitical tension, just like it did in the late 30s, you know, it's World War II. And now suddenly we see hot wars between we see Russia invade Ukraine, and we have all of the old silly news, CNN, MSNBC, all that nonsense. Even they are looking at, you know, ratcheting tension between China and US. So the scariest thing that could happen right now is, because of this new world order we need in global monetary, we start smashing each other violently, like what's happening in Russia, Ukraine, and then that escalates in some way that brings superpowers into it. And Taiwan, you know, Taiwan, China, US, like that whole thing. Like, if that plays out, then that's the exciting crescendo. That's where it fully rhymes with what we went through last time. Now, maybe COVID is analogous to our World War II. You know, maybe that was somehow global. I don't want to go there. You know, I don't want to take it there. But I think that there's an opportunity. I mean, this depression was so much nicer than the 20s and 30s. You know, like the collapse was violent in 1929, and then the 30s sucked, and then World War II, millions of people dying, and now our weapons are so much better now. We can't do World War III. That's the answer is we cannot allow this to play out like it has every single fucking time in the past, where the animal spirits and people being pissed off that they're getting shafted, they aggravate the situation. Like World War II made the financial problems so much freaking worse, and it mobilized modern manufacturing and all of these other this innovation. Like, we got incredible stuff out of it. Like that. This is why, like, if society was just boring all the time, we would and operated in perfect harmony, we would not have any of the progress that we've made technically. It does force that, and that's the yin and the yang of it. That's if you can look at this all stoically and you can go, everything that's bad that happens drives an outcome afterwards, because everything's cyclical. The pendulum swings back and forth, and you just go, all this bad shit inspired this good shit. And I would like us to have a really nice, like, I would like COVID to be our crescendo and have us just intelligently go, we don't get to have a World War III. We don't get to fight like we used to. Let's figure out a way to sort of ratchet back geopolitical tensions. I would like Russia, Ukraine, China, and America to all get together and say, hey, we're all the same thing. We're gonna try and figure out a way where everybody kind of wins here, because we are coming into a time with AGI, fusion, all these things of wild abundance, unlimited coolness. I really think that. And we might be ready to finally break this fucking cycle we've been in of agitation, good times and bad times, for like the last 10,000 years. We just have to be emotionally mature enough and leverage this technology to look at it through that lens and not be mad at each other. And that's why if you get a shiny, happy vibe, this hippie vibe I've got, it's because that is the path forward. And it's not, I didn't get there from a position of ignorance or laziness in my study or too much weed. There is certainly some. But what I did is I looked at all that, and then I developed the right lens to view all this through. And what I'm trying to do is propagate that lens. That's what this show is. So let's get into some of the nuts and bolts. So let's look at the cogs in the machine. So if you look at like Dodd-Frank, let's look at '08. The reason I say, well, there's a lot of reasons for it, but the reason I say that rules is not the approach, it's because rules that we set are always backward looking. So if you look at Dodd-Frank, so I just went to ChatGPT and I asked ChatGPT, what were the top 5 major provisions of Dodd-Frank? It responded, the Dodd-Frank Wall Street Reform and Consumer Protection Act is a U.S. federal law that was enacted in 2010 in response to the 2008 financial crisis. Here are 5 major provisions of the Dodd-Frank Act. I won't read these all the way through. I'll just try and summarize. So the Financial Stability Oversight Council, FSOC, is tasked with identifying, monitoring system. So they built an acronym, FSOC, to look for systemically important things. The too big to fail stuff. And they figured out ways to enforce like liquidity requirement and then limit their ability to invest too far out on the risk curve. And that's cool, but it's very, like I said, it's all backward looking. And because markets still need to function, whenever they plug this stuff in, it just makes lending harder from the systemically important banks. The market still need, like, in order for that market recovery we saw, lending had to reoccur. It had to just go, like, we don't get to just decide we're not going to innovate anymore and we're just going to do this, because this whole thing runs off of innovation. Like, and somebody has to give money to the people that are going to try stuff. And what's fucking crazy about now, because we're at the end of Ray Dalio's curve, is there is no safe, like, there is no, we don't get to go back to a time where global GDP was less than 320%. Like debt, so global debt to global GDP is 320%. So now the interest on all of the old debt is unrecovered. We are in a debt spiral that you don't recover from. And if you look at history, this is what always happens. And it's the reason I don't like to look at corporations and say it was your fault is because the reason everybody has a job is corporations, startups, all these companies, they, through trying to innovate and asking people with money to let them borrow it, it's what pays all our bills. It's how this all works. And that is not an unsophisticated, generalized view. And it's just what this is. And, you know, when this started after World War II, it was already doomed to fail right about now. That's just the truth. And when everybody wants to say, "Oh, this is some like," we always want to waste all this time going, "Oh, it was your fault. It was your fault. It was your fault. It was the boomers for mismanaging this wonderful thing that their parents' generation created after World War II and handed them on a silver platter." If you look very carefully at history of economics and geopolitics, after World War II, the global world order that was formed as a unipolar system of where there was one party with a great big stick, and that was the United States, with keeping all the shipping lanes free of piracy and in many ways misusing that. Like, I don't want to suggest that they were perfectly like that they used it in a benevolent way, that power in a perfectly benevolent way. We're imperfect beings. We're all the same thing. And so we did what any human would do. We are a group of human, like the United States did the best they could, and they followed the inevitable trajectory that history tells us that they were going to follow, where we're at a point where there's so much debt in the system that there is no, like, we don't get the option to return to, like in 2008, we were able to stabilize this a little bit for a time, but we're on borrowed time. Like, you can't erase all that debt without scrubbing the books and building a new world order on top. There is no cure. So, like, you know, I talk about crypto sometimes. It's because when I look at what a new world order looks like, with all of our technology that leverages everything we've learned in the last cycle, we're not going to do it like we did last time. Last time, we didn't do it like the time before. We didn't rebuild something that looked exactly like the multipolar system that existed before World War II. We made something totally radically new where we said, yeah, one crew with all of the power is going to create this time of global stability and global free trade. And that got the emergence of China. That's billions of people that are now contributing to all of this innovation cycle. They may speak a different language, and we may look a little different on the surface, but we are the same fucking thing. And now there's a whole bunch more of us contributing to all this. It's awesome. We did that in the last cycle. We are not going to, we don't go backwards. So I don't see it, like a lot of people look at, like, here's the thing. So I'm going to shrink down me for a second, and I'm going to go to Twitter. Lynn Alden, she does a fantastic job summarizing all of this stuff in a really cool way. And so I'm going to just try and find some charts that make sense. But let's see if I can find one of the ones that inflation, tightening will fix this. Tightening will exacerbate it. The entire system is broke. Yeah, that's where we are. Yeah, like this is really interesting. A lot of the tension that the entire system is under is because the Fed goosed the base rate knob, and we went from effectively zero interest rates up to where we're at 5% or whatever. And then they just did this. They've already gone too far. In order to stabilize Silicon Valley Bank signature, and like in order to backstop, they just added onto their, let's see, total assets, Wednesday level. This is Board of Governors. So basically, they did quantitative tightening. Not only did they goose the knob, but they have a balance sheet with the U.S. Treasury for everything they're doing. The Federal Reserve, the Fed, I should say. they have a balance sheet that they have to maintain. And they tried to get rid of some debt in this tightening cycle, and they managed to dial it back. And then, like, just in, my first episode, like in the last 2 weeks of this GFC series, they've just put on 2/3 of it back onto their balance sheet. Most of why these things failed is because they stopped buying treasuries, and they pulled all this liquidity out of the system, which forced the SVBs of the world to fail. And because, look at this, all the other nations of the world can see our balance sheet because they all use the US. All of their currencies are like layer twos. They're derivatives of, like, the base level. Like 90% of all transactions around the world are in the euro dollar, dollars that are circulating around the world. So, this is why you see Xi Jinping shaking hands in a super significant way on a state visit to Moscow last week, because the Chinese and the Russians are tired of getting totally screwed, and they can see our balance sheet. They can see that there is no recovery this time, and they want to spend. So they're trying to. This is a self-defense play. They are joining forces because they were getting. The United States has we can print as many treasuries as we want. So the United States in that system will always be the last one standing. So these other governments, it's self-defense, because we still, for some fucking reason, think of ourselves as these different nations that are all different things. I feel like we're all just neurons in one big brain that are fighting each other. Because we still look at ourselves that way, it's time for us to evolve and think of ourselves as one thing. And I think we're ready for it. But I like what you see happening there when you see Xi Jinping go to... So China, Russia, and the Saudis have worked out a deal to trade oil in gold. And they say yuan, but backing it is gold. And they're going to this pure... So it's a multipolar system. This is us going back in time. This is us going, okay, if you look at Ray Dalio's cycles, this is what they are doing is they're saying, in self-defense, we're going to just opt out of your fucking Eurodollar system and screw you guys, United States. We're going to go do our own thing over here that goes back in time to where we built a world order, a multipolar world order on commodities which are so inelastic, and that will break a monetary system way faster than what we did in this last one with the Eurodollar. You need elasticity of monetary supply. That's crucial. The reason in 2008 it happened in March is because there is a seasonal shortage of actual dollars. Think of it like the lubrication of the world economy. Like, no, it's not lubrication. It's like it's the gas. It's like, imagine for you crypto people, it's like gas fees. There's not enough. It's like gas fees are getting way super high because there's not enough of the base thing that we pay to transact. It happens in March and about September every year, the way the global economy is set up. And that's way too complicated for me to get into. But it's why Bear Stearns happened in March and then Lehman happened like 6 months later. I think we're about to head into that. I think that this is going to be just, we're going to kind of coast. I see either us going flat. I don't know. I can see when I try and read the tea leaves and do a thorough projection of how this is going to play out, I can see a future where we do it exactly like 2008, where we get like between, if you look at the chart between March and September, October of 2008, it looks kind of like that. But see, the thing is we all have new knowledge about what happened last time, and the geopolitics is all different because they can all see that too. So I don't think it looks like that. That's why when I think the way I position my portfolio in that playbook thing is, I think it's just going to start looking like a seismograph, because we don't know what's going to happen this time. And what I'm saying is not like, this isn't controversial. This is like all the people who really look closely at macro, all of the people who, like all the Wall Street people, all of the people that manage treasuries for Japan and the United States, like all of us are looking at the same data and know that we're just kind of on borrowed time. I would love for us to just time out. I would love for us to just be like, okay, let's just rock this broken thing for 5 more years. Because that would give what I think is the logical choice that is inevitable. It's not going to be, the West is going to, our economies are already intertwined because of what we did in the last cycle. China completely needs the United States to buy the shit they make. They don't have a consumption-based economy like the United States. They were never able to get that far in their turbo growth cycle that they did. So if suddenly they go to war with the United States, or they, we don't get to pick that option. We never get to go back to a multipolar system. We still all are connected and have to make this work together. The way we do it is we take everything we've learned and we put it on a decentralized, very hard to build software thing. And that's what crypto is. I mean, gobs of it is speculative, but the end result is we are going to build something in software that the Chinese, the Russians, the Ukrainians, all of Europe, and the United States can all look at, audit, and it's not going to be because somebody like me made the case. It's going to be because there's not going to be an alternative. And that is going to work so much better than, like 15 years ago, 10 years ago, this was a ridiculous thing to say. But the thing is it doesn't die or go away is because it's the inevitable future. And if you spend the ridiculous amount of time it takes to learn how all of this works, I don't like, if somebody calls bullshit, I'm going to be like, okay, how many thousands of hours have you put into looking at this? I think I'm starting to make tallies. This is 6 years of just thousands of hours. And yeah, it's gotten me all to a place where this is, and so Brandon, when I look at your questions, you're trying to look at the incredible complexity of the old system that is because of Lynn's charts. And let me see. God, there's one that shows debt to GDP. If you look closely, you can see the inflation in the UK over time. We're on the same trajectory. We're just in the cycle afterwards. So we're at the beginning of it. Buying power of 100 pounds over time, 1800 to 2023. The United States is Great Britain, is the UK. We're just about to transition to a new cycle. So let's see. There's Janet Yellen probably saying something that we should ignore. Let's see. Yuri and Timmer talking about QE. Let's see. This chart is really telling because it shows when there's, so like in 08, when you suddenly get these the reverse repo is like this discount window that's open to banks when they're feeling the pressure. And they need money, they need liquidity fast to prevent bank runs. So there's this facility opened up at the Fed that lets them do that. And when you see a spike, it means bad times are here. So if you look at '08, it looks like this. And we all know how that one played out. And then you look at how this thing rolls, and then you see a repo spike right before COVID. That's interesting. You might almost think that what happened in March 2020 was going to happen, whether it's like a whole bunch of people in markets. This is an important time to go on a tangent about why Brandon, the reason I look at, I find markets so much more credible is that's the hive mind. That is, when I listen to the Fed talk, it's supposed to be 300, I think they have 320 PhDs on payroll that are building, and I've done a little homework on how they come to their analysis. They have all these projections and that they're doing with statistical analysis of the past. It's so imperfect. They're only looking at one little piece of it, and it's why they always mess up, is because they've decided they can look at all the stuff and figure out exactly how to tune base rates at the tempo they should tune it, and the position setting, and the way they can pull liquidity out of the system and put it back in through QT and QE. What markets are is it feels yucky, but what they are is they are a system where you just set up a pricing engine for predicting outcomes. That's what markets are. And then you say everybody can participate. So you say, instead of just trusting these 320 people who say we're really smart and we know the answer, we're going to build a system that everybody can participate. So each little neuron can focus on their little piece of this wildly complex soup that is the global economy. Inflation, when I listen to the Fed talk about inflation, they don't sound very sophisticated to me. The way they quantify it with the random baskets of goods is so, it shows such a lack of sophistication in how all this stuff works. Like, what markets do is, so we, in March 2020, we shut off the global economy for like, what was it, 6-9 months, something like that? We shut everything off, and everybody sat in their houses and was freaked the F out. I mean, that's what we did. That's never been done. That is a shock in a lot of ways, like a World War II type shock. That was like suddenly orders dropped off everywhere. Shipping became incredibly under demand because everybody was in their houses and couldn't go outside. So you had these rolling shocks all over every system. And inflation is so complicated because what it is it's like waves spreading out in a pond. You had, first, you couldn't ship anything, so your shipping prices went way up. And that always has to, you can't sell a thing for less than it costs to produce and ship to your purchaser, your customer. It always has to be above that. Inflation. Shipping cost goes up, inflation. Now, okay, now we get all the ports figured out and we don't have this glut on shipping expense. Cool. Now shipping costs come way down. There's even demand falling off because not everybody's buying packaged goods and we're all going to restaurants and all that stuff. Cool. Now you have this burst of inflation that is, nobody can get anybody to work in the restaurants and they got to pay them more money. And all of the factory goods that we're having to pay that needed good, the inputs for their widget or the farmer for their farm the inputs. Suddenly there's shocks because of Russia, Ukraine to the farmer because the fertilizer is way higher. Inflation, just in a different bucket. The Fed, I think naively, just looks at a bucket of random things that I don't know, they're going like this on a dartboard to choose. And they're saying, okay, we know exactly what this is and what it's going to do. But no, you don't. I don't care how smart you are. I'm sure you're all individually and definitely collectively way smarter than me. But I think I'm still going to get my bets better because I'm not going to listen to you guys. You're just this size of all of this. I'm going to go listen to markets because markets are a system where the hive mind of the entire global economy can say, well, I know something you don't know about the price of this thing in 6 months. So I'm going to long it or I'm going to short it. So you touched on this in your last take where you said catalyze. I think you said something. You said like this will catalyze problems, and the bond market is everything. So the bond market, U.S. Treasuries are supposed to be the safest, most liquid asset you can buy. And they're the things that the systemically important banks that we can't let fail have on their balance sheets, right? And we even have regulatory that we're pouring into this thing to make those more stable in these times. So we're building in. We're just humans. And we do the best we can, and we look at like '08 and we say, okay, we don't want that shit to happen again. How do we plug all those holes? And then we do it. But here's where we mess it up. Here's what's going to happen. So I'm not looking in the derivatives market because that's where we looked last time. So I think Dodd-Frank and all this probably made sure that there were circuit breakers that will handle the long and short side, made sure that you're not going to find a position like we were in with AIG. Because that's how humans are. But what we did is Dodd-Frank entirely ignored small and mid-tier banks and is not looking at the fact that nobody's going to go back into the office. And auto lending, in order to get us back out of the March 2020 fucking crazy shock to everything, is they dumped helicopter money on us all. And they said, but go buy stuff, please. We need to get this economy going. It's like that was the CPR and that was the paddles of life on the Eurodollar. Is they poured all that helicopter money in, and then they said, here's a critical thing. They went out to lenders and they said, you know how we used to say auto lending, small banks. I tell you what, you guys, we used to say we would only let you do 110% loan to value. Now we're going to let you do 150, 160% loan to value. We need people to spend all this helicopter money we put into the system. It's what will get the wheels churning on the thing again. Like the ship stopped and it was barreling towards an iceberg, and we needed to get the engines running so that we can turn it, and it takes a long time. So they gave everybody a bunch of money, and then they went to the banks and said, you know, all that shit we tell you can't do, go ahead. We're going to need you to do that now. And then people got out of their houses, they're bummed the F out. They've been yelling at each other about fucking masks and politics for a year. The government gives them a bunch of money and then tells the bank, oh yeah, just let them spend it. So they spent it. They went out and bought that brand new $85,000 Cadillac Escalade, or that 5 Series Beamer they've been wanting. And magically, they were able to get financing, no problem. And I feel like there was even a provision for, like, if you could prove you got helicopter money, then you just automatically got approved for lending. I don't know. There's a great interview. I'll try and link it in the description of Lucky Lopez and Danielle DiMartino Booth on the impending auto loan collapse. When I look at where this next what's gonna happen. Here's what. Okay, TLDR. I think there's like 5 or 6 major weaknesses in the global economy, and the two that seem the clearest to me are auto lending, because of that problem I just described. A lot of people never even register their vehicles. People are picking them up and they still have the dealer tags on them. They're filling up lots. They're not going to fill up the dealer lots that we can all see. The dealers have got these acre lots outside of town where you can't see them that are just filled with repos, and it's just going to keep happening, because last time in 2008 everybody paid their car payment and didn't pay their house, and there was so much. A lot of it is because most of the inflated pricing and irresponsible lending happened in the housing market. And so if you defaulted on your loan, it's cool. Everybody was doing it. And I knew people who just said, yeah, I'm going to live in my house until you totally tell me to leave. And then I'm going to repair my credit over the next 3 to 5 years, and then you're going to need me to buy stuff again, and you're going to let me. And they definitely all got home loans. I stupidly paid my mortgage through that thing. It took me years to pay that thing off. After 11 years of living in a house, I had to borrow from my 401k to sell it. I mean, like, so there's a lesson there, and it's not that this is going to happen in housing. Housing will be affected, absolutely, but because of a lot of the controls and a lot of the things and a lot of the changes, the dynamic of how we're all going to work, and because we're not going into the office again, I think commercial real estate is definitely in trouble. I think residential real estate is going to be one of the safe harbors. I think it'll get hurt because everything's going to price down as this happens, but mostly it'll be okay. Because I think people have locked in really low rates that are one of the best looking things on their personal balance sheets, and that it's going to be really easy to just say, take the car. I'm not even going into the work. I can't, like, I'm a software guy and I can't find a job, you know? And they're going to be able to just be cool in their house. But I think, and also the transition from ICE to electric is happening. And Elon Musk, love him or hate him, has gotten the margins down so far that I think he's going to be able to sell Model Ys and whatever the next low-cost ones are at below the ICE vehicle, and you won't have to put gas in it. And you want the only problem there is the demand for lithium battery. Lithium is a bottleneck that I think they have to contend with, but he's already, like he always does, building out. He's like, well, I'm not going to trust you guys to figure this out. I'm going to figure out a way to get my lithium. And he's got one of the people that formed Tesla broke off and is doing lithium recycling and refining and all that. So I think very quickly, most of the old automakers are going to find themselves with no buyers. They're going to have parking lots full of old new cars that are barely used. And I think it would be very irresponsible for the government to back them because there's no future there. It's so funny. Biden, because he's totally, like, if you look at him, he's very openly in Team Ford and Chevy and Chrysler. And when the White House famously had this electric vehicle day, I don't know, Biden got up there and said, thanks, head of Chevy, what's your name? You did it. They're so far behind on full self-drive and manufacturing EV, their margins just suck. When you look at the Ford Lightning compared to what it's going to be for the Cybertruck, regardless of what you think about what the thing looks like, if you can buy the two for the same price, and one, you don't have to put gas in, there's still going to be a market for that until EV can compensate for pulling. But they're kind of like, if you look at what they just did with the trucks, the semi-trucks, the Tesla Semi, this is all leading to a place where I think the major shocks in like the S&P that we're going to experience as this thing does the seismograph I'm talking about, I think it's going to be all these old ghosts, all these old zombies that are part of the SMB getting scrubbed out of it, just getting written down to zero and not being backstopped because they don't have a roadmap that makes sense. I mean, if we take our tax dollars and give it to a bunch of people that clearly mismanaged and, you know, that are not on the right path, that's a mistake. What we need to do is get lithium production figured out and all these things. Like that would be an effective use. I don't, and it's not because of some bet I'm making. I'm just zoomed way out to here and I'm going, in the best interest of Americans, that's what we should be doing. We should go like this when we hear the people that we used to think were looking out for us saying, we can't let Chevy die. I like Chevys. I drive a Chevy. I like their cars. I don't want it to die, but I look at their balance sheet. I look at how they've invested everything, and I go, this is definitely going to fucking fail here soon. You know? All of this it takes so much time to look at. And so you have an option. When you hear me say that controversial thing that sounds horrible to your ears, like it sounds un-American or something, you can say, he has some sort of hidden agenda. He's the guy who always is the hyperbole, who thinks everything is sunshine and roses, and he's going to lose. That is not what I do, guys. That is not at all what I do. I spend more time listening to the people who say I'm wrong than the ones that agree with me, because listening to the ones that agree with how I'm doing things strategically don't have much to tell me, you know? So no, I go listen to, I'm addicted to listening to bears talk. It's, you know? And I'm spending a lot more time these days looking at the Chevys and the Fords and the commercial, because that's where I see the most problems. So yeah, I don't really have an agenda, and if you look at some of my content, I overshare. I've tried to explain what my motives are for sharing very carefully. I don't have an agenda. I don't think these little things really move the needle at all. And when you get mad at somebody for how they make a bet, you're just wasting your fucking time. I mean, I would love for something I say to be useful or to you know what I would like you to do? Never, anybody who hears me talk and goes, there might be something to that, I would not go run out and buy something, some stock or some crypto or I wouldn't go do some. I would say go research the bull and bear case for what I'm talking about thoroughly. I'm trying to trigger curiosity for learning, and then come tell me what you did. Tell me what your findings were, and do it if you would like to have a happy life and go through it with the seeming, like I've painted a pretty dark picture here in places, but I'm a joyful person. I'm filled with kind of harmony of self, and this doesn't freak me out at all. This is the most interesting fucking time ever to be alive. This is so fun. If you want to feel that way, the right approach is not to go, you said Tesla's cool and Chevy sucks, so fuck you, and everything you say is stupid. It's just so unhealthy. It is so wrong. It is not the right way. What you should do is prove me wrong. I have proven that I'm like, if you leave a comment on my video that seems like, I'm not going to waste any time on people who go, this guy's an idiot, fuck him. I'm going to ignore that if that pops up. But if you say, I looked at Chevy's balance sheet and I looked at their roadmap, I see this product line that they're about to do, and I looked very carefully at Tesla's. I looked at this is critical. You have to look at their balance sheet. You have to look at how much money they have in their war chest to make their roadmap possible. And you have to look very carefully at their progress over the last 5 or 10 years. You have to see how well they have done on executing strategy. And then you have to go do some projections on all of their factory inputs and their competition. And you have to pull all of that together in order to have a chance with me. I don't want to say me and my argument, because I don't look at any of this as an argument. It should be a thoughtful discussion. And I will take great care to paint your questions in the politest way possible. And it's wonderful content for my show. So I'd love you to challenge any of these ideas I have. But if you want to start from equal footing, you have to go do all that research. You don't get to, because I did it. And I have an unfair advantage. I took some time off. I took like a year to just look at all of this stuff very carefully. So if you want to if you want to participate in a conversation with me, yes, thank you. I love that. That is what I am doing this. I want to fuel that curiosity, that passion. Like, I don't know how I got this weird thing where I like doing this. I don't know where it came from, but I got it. And I want to give it to everybody else. I don't want you to say, do what I'm doing. I want to say, do this curiosity and this, turn off your definitely CNN, NBC, Fox. Domestic politics is a fucking joke. Just turn it off. And then you get all this time back to go learn interesting, important things about what's happening. Then the next thing you got to do is you got to get hungry for good data, good knowledge. And you got to not waste any time. I see a lot of my friends doing this thing where they want to create filters and they want to use all of their productive research time figuring out how they can cancel somebody's opinion and delete it. Like they feel overwhelmed by all the knowledge that's available now, and they go, okay, let me find, if I look through everything somebody says, I'm going to be able to find this one line that is incompatible with how I think, and therefore I can brand them as idiots that don't have anything useful to tell me. And then they just go, and they swipe everything that person has to say. Some of the people you disagree with have the best stuff. They have the best. The people that think you're wrong are the ones you should listen to. They're the ones that are going to point out specifically where your plan is going to fail. And if you just don't get mad at them for a sec, they're screaming where all the little flaws are in what you think. Don't cancel. Don't filter. I will always have an unfair advantage in our discussions as I frame this stuff. And I don't ever look at it like I don't want to win. I want to quickly get you where I'm at. And then I want you to tell me where I got it wrong. And we work together as a team. I love all of you guys. You know? It's such a fun way to look at everything. And I want to propagate it. All right. This is an hour. I'm really trying to keep these to an hour. I feel like anything over that, I'm going to lose my audience. So, to anybody who listens, you're so cool. Thank you. To anybody who used this, and they looked through what I was saying. They didn't latch on to some point I made about some of the minutia around the inner workings of the global economy or your favorite automaker. If instead you latched on to what I was actually trying to communicate, which was go get curious and hungry and go just full bore, figure out a way to where you can find a data stream. I tell you what, if you go to my Twitter feed at Monkus Aurelius, that's a long story. MonkusAurelius. Go there. I have a curated feed. I don't even use lists. I should use lists in there, but it's like 350 people that are, after a year of listening to everybody talk, it's the creme de la creme. They will give you it's a data feed that of bulls and bear cases for all kinds of, all spread out, not over just crypto. Now it's all over macro. They will fuel your mind with knowledge. Just take it. And then let's talk and let's work together. And we will crush it. All right. Thank you so much for listening. And you are the coolest, everybody.
Now it's coming around, you're feeling cut down and in the ground, and so we all come together. We making a sound, we sing. Look at all this love we found.